Hello, my name is Scott Redler, the Chief Strategic Officer of T3Live.com. I'm doing a quick little 12 o'clock midday recap-ish because I'm going to be heading back to Short Hills to trade the close. Definitely, a down day. I wouldn't say it was a plunge or there was a flash crash. Last night there was. Last night, futures from 4:30, I don't know, the futures were up like 10 handles, and we went from up 10 handles to flat to down 10 handles to down 25 to down 40. At one point last night, they were down 101, I think. So coming in today, I tried to give you guys some levels that could hold, but you had to be a bit careful because we didn't know whether we would revisit those overnight lows or would we get like a 15-minute low to trade against. So all in all, you look at the chart of the SPX, and I would say that it's definitely a big time wide range bar that just engulfed this entire range. But really, we will have some levels to trade against next week. When we came in this morning, I said we have a bit of a zone where we had a point of reference at 2025, and then really where the 200-day was closer to 247. We actually opened above it, not below it, and still above the 200-day. Okay, we're below the 8-day, below the 21-day, below the 50-day. So basically, there's no momentum. There was no real momentum here anyway. We were talking about what could possibly hold us above this 2100, and it was pretty much hard to find any good-looking stocks, especially in tech. But anyway, we are above this, so we'll use some retracement rules next week. Will the S&P try and bounce back and take back more than half of this, or will we stay here and then break this and get a move closer to 1975 or even where this moving average is here. So you have some points of reference below, and as of right now, this is all that happened. Some say the action's muted because of option expiration, maybe. Some are saying because of the Russell rebalancing, maybe. So with that being said, you don't know, so let's go to the spiders. The spiders also, basically, we came in and said, what's going to hold here? What could hold here? We had a point of reference right there. This point of reference was 202.78, and here is where there was some pretty big support going sideways, which was 204. Okay, we hit a low of 203.38, and now we're at 205. There is I don't know why this out of sequence trade is here. There's definitely a gap that I think that starts around 207. I was thinking that maybe we could come back up to this little spot, and that would be a somewhat constructive scenario where we hold this zone and we retest this 205, 205.50. We went as high as 207, and now there's a big gap there. So the question is, how long is this gap? Do I know how to use this thing? Let's see. Do I know how to use this? All right. How long does this gap, stay open? Okay, and we don't know. So next week we'll go to the 5-minute chart. We'll see, what happens here. There's my gap. Do we stay below this and have a huge unfilled gap, which is kind of like a pro gap, which will then probably lead to a break below the range. As of right now, you had your quick move up, a little bit of a topping tail. Some of us got short on this little break, and now you're smack in the middle of the range. You can actually even draw a little bit of a doji here. So where we're not a doji, I'm sorry, a little bit of a wedge where we break this to the downside. Maybe we head back to lows. So we'll see how this this kind of works itself out. Most other sectors also all have these big gaps. You can see it a little clearer here, where we'll figure out will this gap be a pro gap to lead to lower prices. First move off the open was quick to the upside. You had to really get in there and trust it. It was a quick $2. But again, after being overnight down 100 handles in the S&P cash, it was hard to quickly go with that. So now if you look at here, this also held first support going sideways. So all in all, the U.S. markets are just back to where we were in May and June. Okay, so we're it's not like we've fallen apart. We're at the lows, like Europe or like some of the other areas. So at this point, everyone's going to start saying we're like the cleanest shirt in a dirty laundry bin. But I guess you could say that. But this is what I'll be watching next week. I don't think, if we closed right here, I don't think you need to be long or short. I think you wait to figure out if we could trade versus this and get a red dog reversal, maybe fill this gap, or maybe even get short for more downside. The Russell held like I'm like if 202.78 holds in the spiders, we're probably going to get this level to hold in the Qs, this level to hold in the XLE, which it did, or actually didn't even get this far. Okay, so not much going on there to the down, no real destruction there. IWM, what'd you do? Also, off the lows. We talked about can it hold this prior breakout. Well, it did, and it came off the lows, and actually looks pretty good. Trying to take back the 200-day. So, as of now, there hasn't been any devastation in our markets. Our markets were kind of wishy-washy to begin with. We were trying to make excuses on why if they stay, maybe we could break out and what could we buy, and we're having a hard time doing that anyway. So now this actually just gets us back in the range. Question is, does the easier part of the range that we held today hold next week, or do we start to get tremors from what happened last night? And we could get tremors, right? All of a sudden the UK, is leaving, and why wouldn't, Greece and Ireland and Portugal and some other countries that are in pretty big debt to some of the bigger ones, or the IMF, why don't they say, maybe I'll leave. Maybe, Greece will say, I want to go back to the drachma. You can come visit me and, use the US dollar and get tourism going and buy our goods and services versus the euro. But I don't know. That remains to be seen. Okay, but bottom line is you can't deglobalize. It's almost like saying, let me give you back my awesome iPhone 6, and give me the Palm Trio, or I don't want to listen to music through here. Give me the Discman. No, the world is, technology has taken over, and globalization is happening. It's going to be in lots of different forms, and lots of different shakeups. And as of right now, this is, maybe one big pickle that just came out of the pickle jar. You curl the pickle jar like this, and nothing falls out. Now all of a sudden, one's out, and the others are all loose. So we'll see. Do some more pickles friggin' start, getting out of the pickle jar? And is it going to happen fast, or is it going to shake around a little bit and not be as quick? So we'll see. But I think as an active trader, you don't have to be doing much. There's going to be volatility. There's going to be big ranges, and we're going to be able to use our levels and make money. If you're long term and you want to be, you're putting in a 529 plan or a 401k, don't stop because people are crying Armageddon. But if you trade actively for cash flow and for alpha and for a living, the market feels vulnerable, and you don't want to get caught long if you can't handle it. Same way today, if you shorted the open, some guys are like, what the hell happened here? I just shorted 203.50, now we're at 205.50. What do? I'm down 2 points. Didn't everyone just say the UK left and the world's going to fall apart, and the DAX is down 6.5% in the end, and the Nikkei is down 9%? Why did we just rally 2 points in the spiders? Because the markets trade. You still have to figure out good entries and good exits, and know your conviction level and know your sizing, etc. So, anyway, let's go back to the spiders one more time because I want to kind of see where they are also. 205.33, not doing a heck of a lot. And then some of the stocks that we talked about to see what they're doing. Amazon, held above the 50-day. We talked about, can the 50-day hold? Well, it held above the 50-day for now. Okay, it's below the 8 and 21-day now, so not as strong as it was heading into Brexit. It looked like it was going to break out if we had approval, and it didn't. So now we'll see if this level holds going sideways. Google was kind of broken prior, okay, and it's still broken. It broke this ascending channel here where momentum was lost, and it really never had momentum because you think about it into this spot below the earnings gap, and now, what did it do? It held support 1 for my note. This was support 1 for the day. This was what? 682. Where did it go to today? It went to 685, so it held right above it. So, nice levels for today if you were in there buying fast. But still, not great looking patterns. Apple, I talked about 92.50. Where did it go? It went to pretty much close to it. Why did I talk about 92.50? Because this was the breakdown, failure with the Berkshire news, and came off those lows. Still below all the moving averages, but there was something to turn to. We talked about maybe this could be a security type stock or a safety vehicle in a sea of red with a buyback and a dividend. And if you bought it in the hole, you made some money. Facebook, also kind of strong here. Talked about it filling the earnings gap, which it didn't even get down to. Came to this pivot. and still nothing great here, below the 8 to 21 day, the 50 day. Looked yesterday like it was going to perk up if the market got what it wanted to hear, and it didn't happen. So, if you weren't in it, this was, a nice buy in the hole if that's what you did. So, all in all, we opened down in the first 5-15 minutes, not even 5-15, like first 5 minutes, found the pivot, and we came up from there. If you weren't short overnight, you couldn't make money short yet today. Okay, and if you came in, long and you averaged down and you traded out of things, okay. If you came in flattish and you bought and there were some things to do into the key support levels, if you read the note or or whatever, or had your own levels. So that's the game we're going to be playing for a lot of the summer. I feel like we're going to be playing the red dog reversal game, where we have lows and figure out if we push through, come back above, and you could make money for a scalp long, or then we'll see if we get a move lower and you get the H sell set up and to short some resistance, add some more if we break levels, and do things like that until there's more clarity, until we see better structures in the chart patterns. Because for right now, when you're above the 8 and 21 day moving average, and you're in some kind of portfolio approach, and you could ride the market to the upside. But when you're below, you get tactical, you get flexible, you have a lot of cash, because cash is a position, and then you trade the ranges, and and just you have a little bit more care, because when you have headline driven markets, anything can happen. Okay, same way like today, everyone's like, oh, you could just be short now, we're going back to 1975. Okay, what if something comes out over the weekend, or nothing comes out over the weekend? No other countries say, okay, I'm going to do a referendum, and we gap up 10 handles to fill that gap. You have to take that pain. Or if you say, okay, we held in pretty well on Friday, right, which we are so far, maybe it was because of option expiration, maybe because of the Russell rebalance, or not. And then all of a sudden, Italy says, we're going to have a vote, and we're down another 15, 20 handles, and you have to deal with that. So I would say take less overnight. We'll trade the ranges, and that's your active strategy. If you're in it the long term, stay the course. And when you have big down moves like this, you almost want to put in more. It'll help, down the road. So it's right now. What time is it? It is 12:20. So this isn't the close. This is just as of the close. We've had a move off lows. Okay, we're not at the highs of the morning either. Most support ones held, or most monthly support, what am I talking about monthly support? If you look at the S&P, you'll see, we basically were in this spot in May. We were also just in this spot in 6/16. What are we now, 6/24? 8 days ago we were right here. So we're far from crashing. You might read headlines about crashing and about doomsday and this. We are far from it. Is today a potent day that just engulfed the last 2 weeks? Yes. Can this have power to then break below this range? Maybe. How are we going to know whether we don't have a bounce back to negate any of it? So we'll see. We now have today's gaps in every sector to trade against, and we'll see how the leaders act. But as of right now, we're in the top third of this range. This is an ugly candle. Maybe it closes up a little bit more. We'll see what the end of the day is, and then we'll figure out moving forward, does this hold, or do we see a move towards this area? But for today, hopefully you didn't take much risk into the binary event, which no one typically does. If you've been following me for a decade or so, we don't take stocks into earnings. We do options because risk is premium paid. So why would you, go, all cajones forward into this, even though it did feel as if they were going to stay and we were going to have an upside move, which didn't happen. That's what the market does. You have to expect the unexpected. If you were caught and you're still in pain right now, I would say take the trade off, book your loss. So this way you don't have to think about it, and then you can start picking away at it, in the sessions ahead, because there should be a lot of volatility. But if you're stuck in something, you're never going to see things the way you should see it in order to, get out of it the right way anyway. It's, I don't know, 85 degrees outside. It's going to be the sun was going to be out. The water at the beach is still going to be bluish. Depends where in Jersey. And sand will be there, and the barbecue will hopefully have a little propane in it. So the world's not going to end. Go relax. Have a beer or a glass of wine, walk the dog, play with the kids, whatever it is you do that you need to do in order to, break some of the tension, because there's definitely been a lot of it in the last 24 hours. Have a good night.